let's look at DigiByte slash the US dollar, because there's a very interesting pattern right here and right now. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We go here to the cryptos, and this is the pair. DigiByte US dollar, DGB slash USD. Okay, here is the website for DigiByte. A very good website, because when I visited it, it showed me the website in Norwegian. So they are really doing all they can to get as many people on board, and that is something it's very rare for these crypto websites. So that is definitely a very great function. So more secure, faster, forward thinking. DigiByte is more than a faster digital currency. It is an innovative blockchain that can be used for digital assets, smart contracts, decentralized applications, and secure authentication. Very, very, very good and informative website. I really like this. Here you got some DigiByte blockchain stats. Interesting. Tons of information on this website, so I definitively give them a 10 out of 10 for the website. Okay, so we first look here at the charts. Unfortunately, we do not have seasonality data, so we kind of are stuck a bit with the charts, but the charts, they do show us very, very real price action. So definitively very valuable information here. So we have weekly data points, big picture. So you see here these gray time cycles, rise, decline, rise, decline, rise, decline-ish, rise, decline. So basically these time cycles, they have been fairly reliable. If you look at this time cycle, it peaked intra-week, so within the week here towards the middle, even though it did close lower than here. In this instance, we do peak somewhat towards the middle. This was a very powerful downtrend. Hence, even though we did see some manifestation of the rising phase, it was very modest because the downside pressure was simply so substantial. Here, we peak towards the middle. And in this instance, this high was more towards the part of the time cycle where we do expect, a significant mean reversion. Yeah. If we do look at this time cycle, you see that we did form this double topping pattern here. So here you have a double top on the RSI, and here you also unfortunately do have a double top on the RSI. So that is more supportive of a bearish thesis, long term. Long term in the sense that we are looking at the weekly data points. So the weeklies here, yes, we do have a bit of a bearish situation, but let's look here at the daily data points. If we first look at the RSI, you see these blue dotted lines. They show us that on the daily data points, that RSI level it has produced pullbacks here, and also here. Hence, it's been very tradable. So this is something to look at when you are studying charts, is to find signals that have worked in the past, because if they have worked in the past, then there's a higher probability that they will work in the present. So that RSI signal, yes, it happened again. We did have a pullback. Looking here at the PPO, here you see that this high level of PPO, like here, it did trigger a pullback. This is a bit lower, but you do see that we did see a pullback here. We did touch, actually we did go slightly above that PPO level, and we did get a rather significant pullback. So that is very interesting. Hence, simply by looking at these indicators, we could have, foreseen what just happened. So let's zoom in a bit here. So there is something interesting happening here actually from a potentially more bullish perspective. So let's do it like this. So you could make the case that we have a bit of an inverse head and shoulders pattern potentially developing. The current issue is that we do have a left shoulder, we do have the head, but the right shoulder is not developed yet. The paradox of all chart patterns is that if you wait until they are fully developed, then you do miss the move. And the best risk reward place to buy, to go bullish on an inverse head and shoulders pattern, that is the bottom of the head or the bottom of the right shoulder. Because even if the inverse head and shoulder pattern were to fail, you do potentially at least get a bit of a rally. The thing here is that the right shoulder, it formed support here at the 10-day moving average here in this pinkish color. So that's interesting. Test. Okay, here's a bit of a mix of candlestick patterns. This is one of the reasons why I'm not a huge fan of candlestick patterns. So you see here investing.com has found dark cloud cover, which is bearish, and that one has high reliability, as you see here. Then it finds a 3 upside down, bullish reversal, and that one also has high reliability. But here, all of a sudden, we have a bearish candlestick pattern, downside gap 3 methods, medium reliability. Here you have a 3 black crows, bearish reversal, high reliability. So like it's candlestick patterns, they are somewhat informative, but I think this illustrates my point quite clearly that they can also give a bunch of very messy signals. But yeah, so even though on the weekly data points, I think that the bearish case is a bit louder than the bullish one, I think that here I would actually give the bulls the benefit of the doubt. Even though we did see some problematic signals on the RSI and the PPO here that could signal that there's more downside, at least right here and right now. We do have the inverse head and shoulders pattern, we do have moving average support. So as long as these those moving averages hold, then I think the bulls could pull off something. But obviously they do have to actually get off the fence and buy, because it is very simple actually. You need more buyers than sellers. That's what it's about. So here the setup is something that do help the bulls in this current situation is that not that far back, if you go here, you could make the case that we have somewhat of an inverse-ish head and shoulders pattern. Also, it does look a bit like a rounding-ish bottom. But basically, we do have a somewhat analogous pattern here that did play out in favor of the bulls. You could even make the case that we here have a bit of a inverse-ish head and shoulders pattern that did work out. So yes, I don't think the bulls have any excuse not to rally here. This is a great opportunity. If they do not use this opportunity, then yeah, there's a risk of a significant downside due to this double topish pattern we did see on the RSI and the other alarm signals we found. So basically, it's a very dire situation for the bulls, but the ball is currently in their court. Okay, so the key thing, as always, is to make sure that you have a market neutral portfolio, because the market is very messy. There's a lot of signals of excess in all kinds of different asset classes at this point. Hence, there's a good reason to expect some big move across multiple markets.